The best way I can describe leasing is that it is similar to renting a property. When someone says that you should lease a car, it is the same as saying that you should rent an apartment instead of just purchasing a house. In leasing, you can get a vehicle and drive it for a fixed number of days and miles. That's the idea behind it, and there's also the fact that you don't commit to a lease for too long. With these terms, it's clear that leasing is cheaper than buying a car via an auto loan. In some data I found, a lease could help people save as much as $150 a month, which is entirely bad. Hello everyone, this is Ted from CarlandTV. Get in the back seat, as in this episode, I am going to explain all the things that you need to know about leasing and what you need to avoid if you are planning to take this route. Before I start, please hit the subscribe and notification bells. They help the channel a lot. Now buckle up and let's get back to the video. First, what exactly is leasing? I gave you a short description of leasing. To be honest, that was just an explain like I am 5 answer. The most appropriate way to describe a lease is that it's a form of agreement between you and the car dealership. In this particular transaction, the dealership provides you with a car in exchange for a down payment and consistent payments. The contract period may differ, but most of the time, the lease eventually leads to potential ownership of the car once the said lease agreement expires. Specific factors are taken into account when calculating the amount a consumer has to pay if they want to get the car after the lease period. Of course, the most obvious ones are the dealership's costs of maintaining or repairing the vehicle. Penalties could also start to appear in cases of severe wear and tear that require further maintenance, or when the mileage agreed upon in the contract has been exceeded. Regardless, it's worth noting that at least 20% of new car purchases in 2023 are leased vehicles in the United States, and based on this year's projection, this number seems to have increased slightly. Interestingly, pickup trucks are the most commonly leased vehicles by Americans, with about 2 million trucks being leased every year. Among all car brands out there, Ford and Honda magnetize the market. Now, is leasing the best route for you? I am sure that most of you are watching this video because you want to know if leasing is the best option for acquiring a vehicle right now. When I think about it, the decision to lease or not depends on your resources. If you have money to spare, then there's no point in leasing. You would buy the car directly in a heartbeat. For me, leasing only becomes viable if you don't have the money to handle the cost that comes along with full ownership. That's basically it. Well, you could also lease if you simply can't afford the payments at all, or if you simply want the car for a short period. When any of these apply to your situation right now, then leasing can be the ideal route for you. So, how do you lease a car? Leasing is as simple as going to a dealership and signing a contract there. But of course, that's just an oversimplification on my part. If you want to lease the right way, the first thing you need to do is research. After all, we are talking about high-cost assets here, so you can't just throw money around, especially if your budget is tight. You need to narrow down the list of cars that fit your budget. Not all cars are within your means, so you need to settle on something that you can pay without defaulting or drowning in debts. Of course, you need to check if the vehicle suits your needs, driving style, and preferences. For example, you should never get a large SUV if you usually travel in high-traffic areas or congested streets. And you need to spare some cash for fees and taxes. You should take them into account so that you'll not get blindsided by them. If you want lower monthly payments, consider putting a bigger upfront. The research should also go to the dealership, testing the cars that you want, and see if any of the vehicles fit your taste. After that, you should start negotiating. Nothing is set in stone until you and the dealership sign the paper, so you need to negotiate better if you want to get the best deals on writing. Now, it's not that easy to negotiate. People say that it's easy, but in reality, it's not that straightforward. Only cocky folks would claim that. Negotiating requires knowing every factor that you could use as your leverage. If you are not confident, don't hesitate to bring someone with more experience. Don't bring me, though, because I am not at that thing. In the conversation, make sure that you know all the things that you need to pay right after you sign the list. Stuff like title fees and security deposits are some of the dues that you need to settle up front. But don't get overworked, as these things are pretty much a standard for these types of leasing contracts. Part of the leasing process that people tend to ignore is maintaining the car. Keep in mind that you don't technically own the vehicle you leased, you just rented it. With that knowledge, it's pretty obvious that you need to return the unit once the contract expires. If you can return it in good condition, then it is perfect. You don't have to worry about anything. If not, the charges and penalties could stack up. Dealerships are still driven by profits at the end of the day, so everything comes with a cost. During the negotiation, ask them what kind of damages they could need to sort before turning over the vehicle you borrowed. Entering a lease agreement can get expensive and troublesome if you do it carelessly. In fact, there are some things that you should avoid doing in a lease. Otherwise, you'll end up getting wrecked by the details in the fine print. For me, the first mistake you need to be wary of is paying too much upfront. Now, I said earlier that you need to prepare for the upfront fees upon signing the lease, but I never said that you should go overboard about them. Most dealerships out there advertise low monthly payments when leasing new vehicles. However, what they don't tell you is that you need to pay a big upfront before you can avail of that attractive payment term. This isn't a problem on the surface because that's pretty much how deals like this work. The only worry I have here is instances where your car gets stolen or damaged. The insurance company will reimburse the dealership if any of these mishaps happen. However, you can't expect that the leasing company will also issue you a refund. At the end of the day, you'd be left without any car, and the upfront payment you made can no longer be recovered. I highly suggest that you don't exceed $2,000 for the upfront. Higher than that, and it will be risky. In some cases, depending on how the negotiations go, the dealership will allow you not to pay any upfront at all, and instead just roll all the fees into the monthly payments. This is the safest route to take, and if you have the opportunity to get this term, by all means, do so. Another thing that you need to avoid is not purchasing any gap insurance. I know a lot of you may hate these insurances, but leases are extremely important. Now, what's gap insurance, you may ask? The gap being referred to here is the difference between the actual car value and the amount you still owe on the lease. Let's say you leased the base model of the Ford Maverick, which is about $25,000. The contract states that you can buy the said truck for $10,000 after the lease ends. Now, if by some accident you wrecked your Ford, the insurance company will assess the current value of the truck, and from there, will pay the dealership the amount derived from the assessment. Now, the gap insurance ensures that you don't have to pay any residual amount at all. It's just a small investment that can cover a lot in times when things go south. It also becomes a problem if you don't keep track of the car's mileage. This is a stupid mistake that can incur a lot of costs after the contract ends. Always for a higher limit on the mileage, especially if you know for yourself that you drive a lot. Keep in mind that your monthly payment will likely increase if you do so. Dealerships know that their cars will depreciate the more numbers you put on the counter. Most of the contracts I know are usually set between 10,000 to 15,000 miles. And for every mile you exceed, dealerships might charge you up to 30 cents or so. This might be small, but using that number, you could actually pay up to $1,500 if you exceeded your mileage limit by 5,000 miles. And that wraps up this discussion. Thanks for sticking to the end. If you enjoyed this video, please hit the like and share buttons. I know it's a chore, but it helps the channel a lot. Until next time, drive safely.